Thank you. I have a real treat for everybody in the room. We're in the midst of an open prospectus offering today, so I have 4 pages of disclosure that our lawyers and the Securities Commission has said that I actually have to read. I won't. But I will say a final prospectus containing important information relating to the securities described in this document has been filed with the securities regulatory authorities in each province, except Quebec. A copy of the final prospectus and any amendment is required to be delivered with this document. And I will be making some forward-looking statements, and if we can go to the next disclosure slide, and the next disclosure slide. And there we go, we're done. The overview of Sabina. I'm a relatively new CEO to this. It's been just over a year since I took the helm, and in that time I think we have been very successful in delivering some very key news to our shareholders. We have completed 2 feasibilities. The first was one that I inherited, and although very robust and economic, I think, particularly from a risk and execution perspective, is we felt that there was a better way that we could bring this forward. We came up with what we call our initial project feasibility, which is a 3,000 ton per day project that still delivers almost 250,000 ounces a year for the first 8 years of production, and closer to 200,000 ounces for the life of mine. There are only 2 companies that have put out recent feasibilities using 1150 gold. One of them I sit on the board of, and that seat I guess I will be giving up in July 15th, which is Kaminak. We are also very far ahead in our permitting. We operate in Nunavut, which is Canada's newest territory. We've spent over $20 million in 4 years, and which culminated with a 14,500 page environmental assessment. We finished 6 days of public hearings in Cambridge Bay on April 29th, and we expect a decision within 45 days of that date. Prior to the financing that we just announced, we had $16.4 million in cash and cash equivalent as of March 31st. And I'll be talking a little bit about what we'll be doing with that. Certainly more de-risking, and the biggest part of that is detailed engineering to take it beyond feasibility. The Back River Gold Project is one of these projects that has been around in the business about as long as I have. This discovery was made in the 80s. A number of majors had owned it, and it really hadn't got to critical mass until it was acquired by Sabina in 2009. Within what we call the initial project is we're actually looking at what we think are the least risk, lowest capital deposits to start with. We have additional resources that we will talk about later, and we will show again the optionality of those. So it's 2.3 million ounces, a total M&I of 5.2 million ounces, and we have about another 2 million ounces in inferred resources. This is a project that, like many others in the Arctic, is operated by an annual sea lift, and the rest of all the construction supplies, et cetera, are brought in annually, with crews. This is our mineral resources and mineral reserves, and again, these are the highest grade undeveloped open pit grade resources of greater than 500,000 ounces in the world. And again, to work in an area in the Arctic is great. Is what is the thing that changes it? It certainly is an infrastructure challenged location. But when we look at some of our peers, and one of them would be Agnico's Meadowbank, their all-in cash costs were $613 an ounce in 2015, $550 an ounce in 2014. Their average grade delivered to their mill is just over 3 grams, so we're double that. And again, we see from our resources and reserves, these are 6-gram pits. From our 3,000 ton a day feasibility, or our initial project feasibility, you can see from here that it was an after-tax IRR of 24.2%. We reduced the capital down to just over 400 million Canadian. Break-even gold price, $795. When I first started marking this, I must say from the institutions, particularly the ones that are gold-focused, I had more questions about how does this project look at $900 gold? How does it work at $1,000 gold? It's economic. And what I have seen in the last 6 to 8 weeks, I'm now having those same institutions saying, what does it look like at $1,500 gold? What does it look like at $1,600 gold? We actually haven't run a $1,600 sensitivity, but I can tell you it looks really good. Short payback, under 3 years, and again, one of the very few projects that is very economic at $1,150 gold. If you look at our sensitivities, and we use our after-tax, or you look at the IRR first, if you go across and take a look where we are today on exchange rate, and we use an 80-cent dollar, by the way, in our feasibility, and our metal price, this project today is over $30 million, or 30% to after-tax IRR. And again, there's only one peer out there that is a Canadian asset at $1,150 gold that has a plus 30 million ounce or 30% IRR. Actually, there's two. One is Pretium, which is being built, and the other was Kaminak. Again, we have spent a lot of time and effort in the environmental assessment and permitting, and it's something that we take very seriously. You have to. I think if you want social license and you want to be able to operate, it has to be in your DNA today, in what we have to do. And I think our team has done a fantastic job. Again, finished our hearings. We have what I would say is the golden ticket, and that is all of the local communities and all of the agencies that were at our public hearings all supported the project going forward to what we call the regulatory phase with the commitments that we have made. So when you see the milestones that we have made so far in our EA process, the next is the Nunavut Impact Review Board decision, which we should have on June 15th. Followed that by a minister's decision, and really the last one is the water license for the project in the second quarter of 17. We are, again, when we talk about DNA in our group, is we are developers, we're builders. The last mine that I was involved in building was a 3,000 ton a day mine in the Yukon, north of 60. Again, a very similar project here. If you look at our board and management, again, many mines that we have operated and built and financed, and certainly from a technical and executive management too. We are TSX listed, market cap without the financing, the $30 million financing, which will close this coming week, is about $322 million. And again, a very healthy cash situation. That will get us through the detailed engineering and the final de-risking and permitting. And that project certificate, certainly in the second half of this year, is, I think, one of our greatest catalysts in moving forward, because I think from what we have seen from development projects that are ready to go forward in this cycle, the cupboard's bare. There's been very few companies that have been able to spend what we'll call the boring money, the feasibility, the permitting, and we have benefited from maintaining a strong treasury and not taking our foot off the gas during this bear market cycle. So the number of companies that are at this stage are very few. And I think what is notable is, with Kaminak, is I think the market was surprised when you've got an asset that at less than 200,000 ounces a year, the fourth largest gold company in the world was the acquirer. And that really shows that assets like this today are scarce. And in my career, I don't think there's ever been a time where there's been so few that have been ready for this next stage in what we feel is going to be a very exciting part of the cycle in the market. Again, back to our reserves and resources. Grade overcomes all, and certainly overcomes the infrastructure. I think when I first came to the company, before we had a feasibility and an economic analysis, it was, well, those are northern ounces. There's northern discount. Well, I think that's very hard to say today when you have a feasibility that actually quantifies the cost for the extraction and the development of those ounces. And they certainly are in the lowest quartile of cash cost because they're in the highest decile of grade. From an exploration perspective, we still have 50 targets on the Back River project that we have not drilled. All of our deposits are open down dip and along strike. We have drilled Umwelt, which is the largest of the deposits in our initial project plan, down to 1 kilometer. We're using about, and our highest grades are the deepest. We've used down to about 400 meters, 500 meters in our mine plan. And again, so it's very low-hanging fruit in terms of that upside in developing our known deposits, let alone some of our greenfields and brownfields targets. With that being said, thank you very much.